let's just get back, right? So this will be basically part 2 on YouTube, but you guys are seeing it in real time. But where was I? I was dealing with the premium. So basically, premium shares are shares that are bought at a premium. Like you're gonna see it when we're doing accounting 1B. For now, I genuinely don't think there's a need for you guys to know this because it complicates things, especially for test 1 and those that didn't do accounting in high school. All right, who asked the question? All right, Avuzwa. But just know that there is a difference. If you're really interested, just private message me. I'll explain it in detail, but I don't want to confuse people now. Khotso, hi.
Uh, is if I'm confusing, you can just say I will answer that. On the the premium shares are preference shares.
So we have, so preference shares usually are the ones that are bought at a premium price, right? Those are
Or
preference shares usually. And then ordinary shares are like ordinary shares. These are our normal shares, right? And
then
then there's also a difference between how many are issued and how many are allotted and how many are authorized because there are different types of shares.
am I right if I say Lore what's ordinary shares to don't like it's not mandatory for people who own ordinary shares to receive dividends. Then for those who own preference, they
Um,
always
no. So with
okay.
ordinary dividends, usually, again, there's no need for you guys to know this for test 1, but usually with ordinary dividends, there's a percentage, ne? There's a percentage of an amount of dividends that's going to be allocated. You guys are going to see when you're doing additional information. So they can say that ordinary dividends of like 15% has been paid to shareholders, basically, or it's going to be given on the trial balance. However, with our preference shareholders, usually their dividends is fixed. So regardless of how much the business make, they are going to get a specific percentage of shares. It doesn't change throughout the years or whatnot. However, with ordinary shares, it's more dependent on how much profit the company has made, and thing is, it changes, it fluctuates. Why? Because it's more riskier, right? So ordinary shares are more riskier than preference shares. That's why they have more return. However, preference shares are less riskier, right? And hence why they also have less rewards.
I think
Not a problem. Khotso, uzobuza kusasa buti, cela sichubeke sisoze silale bandla. IsiZulu sami mara siya-improve, ne guys? Like, wow, I didn't think I had it in me. Like, ngikhuluma no-Andile, like, straight. Ubunola's jealous, you're a hater. But it's fine, right? So that's what we needed to deal with here. So this is pretty much straightforward, né? So that's it basically for the statement of changes in equity. I think it's better if we do like an activity, you're gonna see exactly what I'm talking about, right? Then we come to the statement of financial position. Here, nothing much has changed, guys. This is what we've been doing all along, but let me explain it. Under our financial position, we have what we call our assets, which are non-current assets. Non-current assets are usually that's assets that are held for more than 12 months, ne? Yeah. PPE, we spoke about PPE, your vehicles, your equipment, your land, your buildings. Right of use of assets, this is when you are leasing, ne? So if you are leasing something, we record it in our books not as PPE but right of use of asset. Why? Because it would be very misleading for us to say that something that we are leasing we own. Hence why it's a right of use of asset. We acknowledge it as an asset, but we have the right to use it. It is not ours. Are you guys following? But I think right of use of asset you deal more with accounting 2A and accounting 1B. For test 1, I don't think they're gonna kill you guys like that. Yeah? But maybe the aim this year is to kill. We never know. Yeah? But we will deal with it. Then we have investment property, intangible assets. Intangible assets, you guys should know. Intangible assets are basically assets that which you cannot hold. They are intangible. You can't see or hold them. What am I talking about? I'm talking about goodwill. I am talking about copyrights. I am talking about intellectual property. I'm talking about things that have trademarks. Ne? All of that, your intellectual property, which is IP, it's intangible. You can't hold it. You can't say, you see that, da 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 da, I'm loving it, right? That's IP. McDonald's has the intellectual property rights to use that logo, that slogan. It can be worth a certain amount to them. But you can't tell me that you can see and feel and touch, da 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 da, I'm loving it. Otherwise, you don't deserve to be here in this lesson, guys. you know where you deserve to be. Ne? If you claim to tell me that you can see that I'm loving it, that is crazy, right? Intellectual property or like a patent. Do you guys know what a patent is? A patent? I'm cooking you guys so that you guys are forever here. You guys must be forever tutor. Like, oh my gosh, that tutor accounting is like so easy with him. And then Bandila will be like, accounting. Do you guys know what a patent is? A patent. A patent. Yes. I like people that say yes, but they don't answer.
So
What is a patent?
isn't it like exclusive rights towards an asset? Towards exclusive.
Yeah, something like that. So how can I better explain it or word it for you? Ne? You're right about the exclusive part. Ne? You are absolutely right. But there's a better definition. Ne? There's a better definition. So what a patent is, ne? Let's say it's a legal right. Ne? It's a legal right granted, right, by government that gives a investor, for example, or an inventor, I mean, a person who creates something, right? It's a legal right. You don't need to know this, but it's good for your general sake. It's a legal right granted by government that gives an inventor exclusive right to make, use, or sell or license their invention for a specified period, right? Right? So you have exclusive rights to produce, sell, or license an invention. So, for example, I'm not sure if you guys know dry bath. Do you guys know dry bath? So there's this other guy from Limpopo who created a product called dry bath. Do you guys know what dry bath is? I love my Limpopo people. They think it's very outside the box. So dry bath, guys, was an invention created by Ludwig Marishani, which is a Limpopian, okay, South African rather entrepreneur. Listen to this concept, guys, especially for those that don't like bathing. Listen. It is a waterless bathing solution designed to help people clean their skin without the need of water. Ha, ha, ha. Dry bath, ukwenza without. Exactly, you guys get it. So for those that don't like bathing, and I know they are here, you can bath without water. Kabanga boy. So what he did, guys, or what he has is a patent. I don't know why Musa is clapping hands, but I'm sure that's a product that you would like. Ne, Musa? It's okay. This is a safe space. Right? So basically, Ludwig can patent that product, guys. Ne? He can be the only person that has exclusive rights to. Now, ladies asking how much. As a girl, oh, guys, oh. Dry bath is meant for boys, guys. Please. Singayitholaphi le product sure no guys, I think dry bath must be meant for boys. What guys? Girls, guys, please use water, guys. Please. Ne? Guys, I know very but also guys, respect yourselves, man. Imagine sleeping with you. But a shout out to dry bath, guys. It's actually not meant for people that don't like bathing, but rather people don't have access to water. So it's actually a great product. Because you know, South Africa, not everyone is blessed to have water. You guys know this, right? So the product is meant for such people who don't have access to water. Not people that have access to water but are lazy to bath. Ew, like, ew. Angazi ukuthi ungayitholaphi boy, just check on the internet. I'm sure they'll tell you. Ne? But that's fine. And then we have investment in subsidiary. So this is like your Meta. So it's going to be your Facebook, Threads, and Instagram. Other financial investments would be your fixed term deposits and stuff. Is everyone okay with the non-current asset part? My heart is breaking. My heart is breaking. She's a lover, she's a child star. Are you guys fine? Fine. We can continue. Ne? We can now go on to weigh our current assets. This is basically clean inventories, trade inventories, other current assets, other financial investments, amount due by subsidiary, cash and cash equivalents. You get our total current assets. Everyone is fine with that, ne? Is everyone fine with our current assets? You guys need to know this. Okay, Inhlakanipho Gaga, talk to me. Talk to me, Mr. Gaga. Where are you lost? Who are you? What are you? Who are you? Mr. Gaga, or is it Mrs.? But I think it's Mr. Nhlakanipho. Hello, it's me. What is amount due by subsidiary? Amount due by subsidiary is basically an amount that your subsidiary company owes you, in plain and simple terms. Right? In plain and simple terms. Ne? Nhlakanipho, are you alright? In plain and simple terms, it's an amount that your subsidiary owes you. So is everyone fine with the current assets? Sharp. Now we move on to what? We move on to our equity. Our equity is share capital, share premium, and retained earnings, right? You guys for accounting 1A most probably will only be dealing with what? Share capital and retained earnings. You guys know what share capital and retained earnings are, right? She's a track star. She don't wanna when you guess her. You guys are okay, ne? Sharp. This is very easy. This is just cramming the format. This you need to know religiously, wholeheartedly, right? So again, guys, I always mention those that are church going, right? You must always pray the following prayer if you're doing accounting 1A, right? In the name of the Father, the Son, and the Holy Spirit. Dear God, thank you so much for giving me life to see another day. Thank you so much for the blessings. And please give me the strength to fight accounting and the demon that it happens to come with. Ne? You're having an honest conversation with God. God, guys, when you pray, He listens to you. If you pray to Allah, also do your stuff with Allah, inshallah, right? I think it's God willing. Muslim, whatever. Pray to whoever you pray to. Accounting, guys, is a real death. Ne? It's a real death. Have you guys seen that video? Oh, football will kill you a real death. That guy hasn't done accounting. Bring him here. If football kills him, accounting buries him. Ne? It's painful this thing, guys. So you need to practice. You are scaring us. Oh, Bonolo, don't be scared. Fear only comes to those that don't trust themselves. If you study Bonolo, you will pass. By the grace of God. If you play around, you will fail. I'm telling you, play around, you will fail. It's me being honest with you. I can't lie to you as a senior, guys. I would be doing a foolish job as an older person. You play around, you will fail. You drink the weekend before a test, you will fail. Make sure you prepare here. It's a real death. Ne? Sharp. Then we come to our non-current liabilities. We have our long-term borrowings and lease liabilities. Ne? And then we are done with non-current liabilities. Is everyone fine with non-current liabilities? Okay. And then what else can we have? Lastly, we have our current liabilities. So these are liabilities that need to be settled within 12 months. Trade and other payables, current portion of long-term borrowing, current portion of lease liability. Is everyone fine with what I've just mentioned, guys, in relation to the financial statements of the new format? Sharp. Now, can someone type in the group, hi guys, we are about to now do a tutorial, because I want us to bambisa something, maybe conceptual framework or accounting equation or something, just to give you guys the light and the vision. Ne? She's a runner, she's a track star. So just don't leave. Ne? You guys can mute your mics while I look for a video, right? Let me see. So I think, do you guys think I should cut the video here, right? Or on YouTube, we must make it one long video, because this is already part 2. Do you guys think I should make part 3, or there's no need? Let me just continue on this lesson. What do you guys think? And you guys are gonna be the ones watching this. What are you saying, Kabelo? Yes to what?
I think, sir, you should cut it here, sir. Then,
so, thank you so much, guys, for joining. Okay, wait, let me explain. I'm not ending the call. I'm ending the recorded lesson. So I'm just doing an outro for those that are gonna watch it on YouTube. So, welcome, guys, to the end of Dripanomics tutorials accounting 1A. Thank you so much for gracing us with your presence, and I hope you really enjoyed the video. We are now going to be moving on to another tutorial question, which I hope you guys are gonna see in the next video. This episode is proudly brought to you by Red Bull. Red Bull gives you dripper wings. Welcome to Spotify. Okay, I'm joking. But you guys get it though. But yeah, let me end the video.